What's the easiest way for beginner investors to get started with gold investing, especially if they invest heavily into ETFs?
Yeah, well, in the United States, there is the GLD ETF. There's also the SLV ETF. They're run by, I believe, BlackRock, the biggest institutional investor in the world. There's some debate amongst the hardcore silver and gold communities whether or not those ETFs actually have all the physical gold and silver that they purport to. In speculation, I'm not going to comment on that, but that's probably the easiest way. The other option, if you're talking, specifically about the precious metals, is for a person to actually buy the metal from a local coin shop. But now there's just so many options online. I know both in Canada and the United States, where people can comparison shop and buy physical gold and physical silver. I will say one very important thing, if anyone is ever going to buy the actual physical metals, do some background checking on who you're buying it from. And most of the bullion dealers out there, the vast majority, are great people, very legit. And make sure that the price that you're getting is as close to the spot price of silver and gold as possible. You can go out to Kitco, which is also a bullion dealer, and you can check the spot price of gold and silver. What you really want to do when you're buying physical metal is get as many ounces of the metal as you can for the lowest price. So, here's a good example of a 1 ounce silver coin, right? And it's fancy. It has a unicorn on it, but it's an ounce of silver in the long run, right? Unless it's a real collectible thing that's going to have some additional value added to it.
I had a couple questions. Spot price. I'm not too familiar with that terminology. So spot price, when I look at gold, I'll go online. The gold price is $2,500. Is that $2,500 per ounce? And then spot price, what exactly is that in relation to that price I just mentioned?
Yeah, well, the gold price right now is actually $3,200 per ounce. The spot price is like the immediate price for like immediate delivery of the metals. There's also a futures market. Essentially, what you can do with the futures is you're getting into a contract to buy gold or silver at some future date. So the futures price usually is higher than the spot price. So the spot price is what people really want to keep an eye on because that's like the immediate price for gold and silver.
And then going back to the first way, you said buying, was that an ETF from BlackRock?
Yes.
Right? Okay, that's what I was doing some research into. Like SPDR, something like gold, I think is like one of them.
Yeah.
So what they do is they're housing the gold in some Swiss account somewhere,
right,
or who knows, underground.
London, yeah.
Right. But is it, in theory, it is directly tied to physical gold, right?
Yes.
It's not just being like, hey, gold price is this much and that's what it is. So when you buy in, you're technically buying into physical gold, right?
Yes.
That's the way it works?
Yep. Same thing with SLV, which is the silver ETF. In theory, you're buying into. Now, there's also in Canada, Sprott, you may have heard of Sprott Asset Management. They have PSLV, which stands for physical SLV. A lot of people in the gold and silver field feel like that's a much more legitimate way to buy the metal is through the Sprott gold and silver. And they're not, I think in Canada, they're called trusts. They're not called ETFs, but it's essentially the same thing.
Like the whole market kind of collapsed, but gold didn't. I was doing some research on it last night. I think they pulled back like a couple percent. But when you're looking at crude oil, you're looking at S&P 500, like the Trump 100, gold was the only thing up. I wrote a number down here. Gold was up 20% compared to everybody else. In the last 6 months, it's up 22. A year, it's up 34%. 5 years, it's up 4%.
Right.
Is gold going to keep going up? Is it overvalued? The S&P was overvalued for a bit. I'm thinking in my brain, what's the easiest way? Low-hanging fruit, buy an ETF. But am I buying at a potential all-time high and there's some pullback? Or because the markets are so volatile, there's tariffs, people are going more psychologically, let's get gold because gold's been around for 1,000 years and that's why it's not affected. It's like the one stable currency. Yeah. So it's not being affected as much and actually might go up further. Like these are questions I have.
Well, that's a big question to unpack. And I will tell your audience, I'm not a registered financial advisor. I'm not giving financial advice. However, I will give my opinion and my advice. And I think, when you think about gold and silver and I lump them together, precious metals, you got to realize that as you're talking about price, right? You're using the US dollar as the unit of measure. You're not talking about an ounce of gold or an ounce of silver. You're talking about the price of gold and silver as measured in US dollars. So we could talk for the next hour about how the value of the US dollar, if you know how to use a calculator, is in big trouble. Excuse me. So that's like one of the big factors to consider. The other thing with gold and silver is it's not just 1,000 years, Gary. Silver's actually been used as money longer than gold has. We're talking like 3,000, 4,000 years. It's universal, right? Throughout the entire planet. You and I could hop on an airplane, close our eyes, fly to any random place in the world right now, and gold and silver are valuable. When things get kind of out of control from a geopolitical level, when things get kind of out of control from a fiscal level with the United States government, that impacts that paper dollar. And if we're going to use that paper dollar as the unit of measure to value gold, well, then, we can see, JP Morgan just came out and said that they can easily see $6,000 gold by the end of Donald Trump's term as president, right? Because there's so few people in the United States that invest in gold that just if a small percentage increase were to occur, it would be like a tidal wave of money coming into the precious metals.
Really quick, I've noticed over 80% of viewers who watch aren't subscribed. An easy way to support the channel is by hitting that subscribe button, and I personally commit to continue providing quality educational content with each video. I'm just using some hypotheticals here. You don't have to comment on this. I always go like a conservative portfolio, or at least my version portfolios if you're just ETFs, you do 70% in like the S&P 500. If you're American, you buy VOO. This is for hyper conservative people who don't want to think. And this is if you're not doing all in one. Then you do, 20% in international, developed, and emerging markets. So what are you at? 90%. Then maybe there's room for 5% there for gold, right? Yep. And then you can do 5% in whatever else. I think that's kind of when I was thinking about it. I was like, oh yeah, I could probably reallocate and take some from emerging markets or developed markets and use that small percentage and reallocate it into 5%. Now let's talk about the hypothetical to 5, or where am I going to put it? I think the ETF that you mentioned first, especially if you're saying, you're not saying, you're just reporting on what other people are saying, that it could get up to $6,000 by the end of Trump's presidency. You said it's at 3,000. So like, okay, great. Just from looking at percentage increase, put some there. Physical gold, I got enough of that. Next thing is, all right, there are gold exploration companies. Simplifying this, exploration is people going out there and going, where's the gold?
Developers, people go, okay, I think there's gold here. Let's get the permits. Let's build the infrastructure. And then there's gold producers who go, all right, thanks, other two. I'll buy that off you, or I'll work with you. Let's extract it from the ground and let's sell it. Essentially, that's what they're doing. And then they have gold reserves. And there's a couple interesting facts about this. Which one, for newer investors, do you suggest investing in to start? Secondly, gold they don't find a whole lot of new gold every year. No. I think the reserves increase by 1% every year, or some crazy low. Are they running low on reserves? Yes.
And when I look at stock prices of some of these, especially exploration companies, you're talking 20 cents, 12 cents. But then I go, my brain is going, well, they're not finding a whole lot. Gold price is going up. Are they going to start investing in that? And then, I'm looking at your channel. This is where I get my gold news from. A lot of these facts guys, I'm getting it from interviews Ron does, stuff like that. But I didn't know that exploration to production now is going from 9 years up to 17 years. And so I'm like, okay, so my time horizon on that is I'm thinking immediate lift. You're going to just open up a mine. It's not how it works. And then they're going to Pakistan, Afghanistan, places where they have to now work with the locals to make sure they don't get murdered. There's a whole bunch of stuff involved in this. That's just some facts for you guys. Like, that's that situation surrounding it. So you are a newer investor. This is, for me, interesting. Where do I start? Where do I?
Yeah, well, everybody's different. And like I said earlier, I'll repeat it one more time. I'm not a financial advisor. Now, the kind of hierarchy you laid out from a gold explorer is a company that's the highest risk, but potential highest reward. It's a group of people that are raising money and saying, we have a claim up in Alaska, in Quebec, in West Africa, wherever it may be. And we're going to go, we believe there's gold there. We have really good reason to believe. We're going to go drill it, and we're going to find it. And we're going to report that back to the market, and we're all going to get fabulously rich, right? That is the most risky part of the market. The developers have already done that. The developers either themselves or they acquired a property that's already been drilled, right? And scientifically, and there's strict regulations on how this is done, they've been able to establish that based upon, actuarial type data, we know that there's 2 million ounces of gold on this property. So now they're moving it through the process of getting a permit and building a mine. That's why they're called developers. A little less risky. And then at the top of the food chain, you've got kind of mid-tier producers, companies that have mines, have the gold in the ground, they're producing. You can see their quarterly numbers, see how much gold they're making. And then above that, there's the majors like the Newmonts and the Barricks, the big names, with the big. So that's kind of the hierarchy. And it just depends on how someone wants to kind of allocate their money based on risk, right? Because the explorers can offer unbelievable return, but most of them wind up not doing anything. That's just kind of the reality of the situation. And I will say this about and I want to circle back to something else you said as you were speaking is, yes, there is less and less and less gold being discovered every year. All the low-hanging fruit is gone. Okay. Now we're in a very interesting situation right now where the gold price is around $3,200 per ounce. These big producers, the companies that already have the big operating mines, look, when gold was $2,200 an ounce, let's say it cost them $1,500 to get it out of the ground per ounce. When gold goes to $3,200 an ounce, it still costs them $1,500. So they are printing cash like never before. They also are mining as much gold as they can. So they're eating through their reserves, which they need to replace. And these big mining companies generally don't want to go out and explore for gold, right? It's outside of their wheelhouse. It's risky, everything else. So as they accumulate all this cash, they are going to start looking at some of these development stage companies because it's a lot cheaper. And the cool thing, Gary, is that these developers are so underpriced. I mean, from any metric, it's incredible. So they're going to have all this cash and they're going to have to go on a shopping spree and buy up because there just isn't a lot of gold being found. And there's very few companies that are kind of in that advanced stage of development. So it's an interesting dynamic. I'll end with this. I believe, and I have a lot of my own personal money invested kind of through the whole food chain, both on the gold and the silver side. They are, when you compare a precious metals mining stock to any tech stock, it is mind-blowing. And I'm not saying they're the same thing, obviously, but just by any valuation metric, the mining sector has been just ignored. And I think we're moving into a period of time where interest in that sector, because it's been so depressed and so far down, a little bit of interest can go a long, long way. Can I throw one more thing in real quick, Gary? The other option for gold that we didn't talk about, this is very interesting, is MoonPay just made this available like a week and a half ago, is tokenized gold. So have you heard of USDT, the stablecoin USDT? That's from a company called Tether. Tether also has a product called XAUT, which is tokenized gold. Okay, so each token of XAUT is going to cost roughly what an ounce of gold costs, but each token is backed by real physical gold in a vault in Switzerland, and it's LBMA, good for delivery gold. So it's like all super legit. Again, this is Tether, but that really combines the benefits of owning physical gold with the benefits of tokenized gold, right? Because owning physical gold is, a lot of people, including me, would say, well, if you don't have it in your hand, it's not yours. But there's some drawbacks to that as well. So it kind of combines the benefits of tokenization with the benefits of holding the physical metal.
So it's digital. It's a coin that's completely backed 100% by actual physical gold.
Yeah.
So the coin value changes with
the price of gold.
Wow, that's what it is. It's just a one-to-one. It's just literally just you own gold, but it's just a digital version. That's what it is.
Yeah.
Can you hash it out for physical?
Yeah, it's redeemable.
Or you can.
It is redeemable. You can learn all about it at Tether Gold website. Yeah, it's. I'll just read this. Interesting. Here are my notes when I first started kind of learning about it. It's verifiable, right? It's audited, all that good stuff. It's stored safely, right? If you've got 100 ounces of gold at your house, You've got 100 ounces of gold at your house. I'll leave that alone. It is.
By the way, I have no gold in my house. Anyone watching this, it's secure.
Yeah, same here. Same here. It's redeemable. The other thing is it's tradable 24 hours a day, 7 days a week, 365 days a year, and it's divisible, which means like it can be divided down to like 6 decimal points, like tiny little fraction. So if you only wanted to sell a quarter of an ounce or an eighth of an ounce or a 1/10,000th of an ounce, and you can transport it, right? Like, look, Gary, I know, right? Let's say you've got 200 ounces of gold, right? And you want to go visit your old relatives back in India, and you want to bring your gold with you. Good luck taking 200 ounces of gold through the airport.
Yeah.
So anyway, it's interesting. It is interesting.
Another thing I think with gold is I know people say it is liquid. You can, if you have a couple ounces, you have some gold on you, you can go to like a pawn shop or something and like flip it. But this, I'm assuming, is far more liquid because it's a digital coin where I can go, I sell this, I get some cash immediately. Right.
Yeah.
So I feel like it's just a more hyper liquid version of physical gold, and it is physical gold, but the digital, because like you still have to go through that process of I have physical gold, I got to find someone to buy it, they got to like appraise it probably and like figure out what the quality is and then sell it. That's a whole process.
And the other thing is too is if you do that, you go to the pawn shop or the coin shop. There's big spreads that you pay, right? You pay a big to buy a gold coin. And then to sell a gold coin back, let's say in the same day, you're probably going to lose $100. Don't quote me on that. We could look it up if you want, but you're going to lose a significant amount of money. Whereas with this, it's but it's very, very slim, laser thin, like commission or margin that you're going to pay on it as well.
Watch these 2 videos for more investing tips.